We have Howard Lubert, Area President of the Kurtzu Forma Mid-Atlantic. Hopefully I didn't butcher that too well.
Well, good morning. Okay, 25 minutes to tell you everything you ever wanted to know about angel investing, right? Needless to say, not going to happen. Here's what I will try to cover for you in those 25 minutes. But I promise you to do so. I'm going to do it from the 10,000 foot level. I gave some thought to what I wanted to kick off in this presentation and came up with the idea that I'd much rather give you very broad strokes and invoke a lot of questions after the fact than to focus on one or two specific areas and perhaps leave 2/3 of you. So this is how we're going to do this. So, a little bit about my background. I celebrated my 30th year in private equity in September of this year. I've been kicking around a little bit, including a fairly long period of time with Safeguard Scientifics, the very first publicly traded venture fund that's now way in the toilet, which is unfortunate. And for many years, until July of this year, for the last 8 years, I celebrated sharing office space on the old Safeguard campus with Pete Musser, the founder of Safeguard. So I am heavily involved in angel investing, heavily involved in venture funds, as you can see from this list. I forgot to make one minor update to this. I resigned after 5 years. I resigned as the managing director of the Rowan Innovation Venture Fund. 5 years in a $5 million evergreen fund is more than enough time in academia. This is the real me. I have very fortunately spent my life living in around one contention. I'd rather seek forgiveness than seek permission. I do not recommend it for everyone, but it has been okay as far as I'm concerned. So let's just do a quick level set of people in the room. How many of you are entrepreneurs or think you're entrepreneurs or entrepreneurs in training? A lot of hands, that's good. When I do this at academia, I then challenge that because according to the Office of Tech Commercialization organization, 87.5% of all geniuses currently developing products at universities will not leave the university, give up tenure, give up their lab to go on and create a new co to commercialize their product. By definition, they're not entrepreneurs. They're geniuses. They're scientists, they're inventors, they're innovators, but they're not entrepreneurs. So that's very different here, obviously. Okay? Any students in the room? Faculty, staff, alumni, if we do have some academicians across the board, okay? A lot of independent people here. Serial entrepreneurs, anybody? Good. And how many investors? Excellent. Angels? Few of us, okay. Hi, Liz. And any VCs? No one, oh, one that will admit it. Okay. I come from an unusual family. I have a younger brother, Ira. Some of you may have heard that name. He manages about $25 billion of venture. I'm in the angel side. Here's the irony. For the last 8 years, I've run monthly meetings at the Cira Center on the 12th floor in Philadelphia. My brother, until July of this year, had the top 2 floors of the Cira Center. And when people came to Kurtzu meetings, I used to say, if you think you're going to be a passive investor, you're in the wrong room. Go up to 28, ask to see my brother and see if he'll take your check. We're active hands-on investors here, we're angels. So a little bit different space. All righty, so here's what we're going to start off with. Some fundamental challenges that each and every one of you face, and some of these will probably be more than intuitive and obvious. No one's laughing at a cartoon. It comes at a bad time considering the shooting yesterday, but you get the intent. All right, so the vast majority of you are in the biopharma life sciences space. Some of this is not as appropriate as it would be if we had a cross-section of people from consumer products, technology, life sciences, clean green energy, real estate, et cetera. But here are some facts. In 2009, there were just as many A-round follow-on investment opportunities as there were seed. by 2012, 2016, and 2018, look what happened to the numbers. What do you think that results in? I'll tell you. Less than half of the companies in 2015 and 16 saw follow-on rounds. What does that mean? They went under. It's just that simple. Investors have had the opportunity, because of the volume of business, to become much, much more selective in what they invest in. And unfortunately, as Dean pointed out early on, the almost total lack of early stage VC funding, especially here on the East Coast, it's more prevalent out west, but here on the East Coast, the almost negligible amount of VC investing in early stage deals is very, very obvious. And there have been record number of VC deals moving upstream to do much, much larger opportunities. For you in the biopharma space looking to fund phase 2 clinicals, that's a great piece of information, assuming you need $25+ million to do it. And if you don't get their attention. Here's a pretty significant fact. Again, probably not as appropriate to the audience in this room today as in general angel investing, but this is a fact. In North America, less than 1% of all the companies that raise money from angels will ever see a dime from a VC. Less than 1%. So when you're thinking of structuring your legal entity and you're thinking of putting a company together, if you believe at that time that there's an IPO in your future, take a deep breath. You can get there for a whole lot less money and a whole lot simpler approach if you think about how to do that. So, with the statistics that you just saw, what are you going to do to successfully attract investors? With all of the competition that's out there, I'm going to suggest some ideas to you today to help you get in the ballpark. What's it going to take? How are you going to do it? And remember that there has always been and always will be a golden rule. Let me suggest to you something that I've said to people for the 34 years I've been doing this. You have forgotten more about how to do the magic that you are doing than I could ever begin to understand in my lifetime. I've spent the last 34 years figuring out how to get deals like that funded. Why don't we become partners, not adversaries? I'll bring the expertise to the financial side. You bring the secret sauce and the science and everything else. You need to find people like us to partner with to be successful. Now, angels, who can invest? How do they invest? And so on and so forth. So I'm going to load up some statistics similar to Dean, but I'm not going to take a lot of time to show them to you. But here's the key piece, okay? Under SEC Rule 501D, anyone in the United States or Canada who has an income of $200,000 a year or more for the last 2 years and is likely to meet that this year, or if they file jointly, just change the number to 300, or they have a net worth of over $1 million, not including their primary home, qualify to be an angel investor. How many of those do you think there are in the United States? Anyone? How many? Million? Anyone else? 20 million? Anyone else?
1%.
The most recent guess is 22 million people qualify under these terms. How many of those 22 million do you think are active angel investors today? 400 and some thousand. A pimple on a gnat's butt. So, here's what we have. We have hundreds of thousands of entrepreneurs chasing 400,000 active angels and 22+ million on the sideline that qualify. What keeps me up at night is trying to figure out how to tap into that 22 million and add them to the active side. And it's a tough job.
How do they define activity?
Sorry?
How do you define activity?
They write at least one check a year.
Into that type of a transaction or broadly?
Into a qualified angel investment. All right, so again, I'm not going to spend a lot of time on numbers. There's a lot here. We can make these slides available to anyone that wants them. There's a copy here. You can get copies. But I went back and pulled some numbers from a study that was done by the Angel Capital Association. Okay? They are the trade association in North America and the world for accredited angel investment groups and individual angels. So here's some numbers. And there's averages, there's totals. These are slightly dated again, 300,000 angels at the end of 2016. We're over 400,000 now. They just haven't published the latest report. How do we invest? The vast majority of us, 70%, invest through groups. Take a deep breath and think about that 70% number. Why would you chase individual angels for checks when you could spend the same amount of time getting in a group and perhaps attracting a few hundred, or maybe even, in our case, a few thousand to invest in your deal? How big a check do we write? According to the ACA, the typical check is $25,000. How many people in the room here that are actively working on building a company think there is an IPO in your future? No one. Great. Okay. That's excellent. Because the SEC says you can have up to 2,000 people on your cap table. I can't tell you how many times I listen to entrepreneurs who say to me, I would rather you pool all the money, put it in a single-purpose LLC, and invest as just one line on my cap table, because when the VCs come in, they don't want a crowded cap table. And just let me say, that's as much BS as about I can take. I will share with you very quickly one of our greatest investments in our history. I found a company in Austin, Texas called Savara Pharmaceuticals 8 years ago. Savara is an orphan drug running company working in the cystic fibrosis space and working very diligently to get out in the market. They are publicly traded today on the NASDAQ, a liquidity event. But the head of Savara, Rob Neville, will tell you that he raised $39 million in 3 rounds from just over 350 angel investors. And I'm pleased to tell you that just over 200 of those investors were Keiretsu members who invested 22 of the $39 million. He spent not 1 minute talking to a VC anywhere. Did 100% of his funding. Now, he did have a lot of, knock on wood, a lot of non-dilutive capital from the CF Foundation and other types of cyber grants, which is great for us. We love those. So, a perfect example of how to get out into the marketplace without having to step across the line. Okay? The smallest check typically accepted in an angel group when they are being pooled is $10,000, as you can see from here. In Keiretsu Forum, we're a 20-year-old organization, celebrated our 20-year anniversary in September. We're 8.5 years old here on the East Coast. There have been $7 million+ checks written in the history of Keiretsu Forum by individual members. 5 of the 7 came from the Mid-Atlantic region. 5 out of 5 in life sciences bio investments. 3 of the 5 from one member. Probably some of you know him very well. We're old farts too. Median age is 59 years. Okay? We are struggling to attract millennials who are now qualified as accredited angel investor prospects to get them engaged and involved in this process. So those of you that are, and again, most of you are just bio people. So when somebody walks in and tells me they've got the greatest SaaS application I've ever seen in my life, it just so happens I lead the technology sector for Keiretsu and have spent most of my adult life in technology. So I understand that. But if you're just investing in life sciences, by the way, if you're just investing in any silo, shame on you. If you're not diversifying your portfolio, you could be in a lot of trouble. But that's not what this topic is about. We can talk about that another time. But we're older people looking to make qualified investments. Here's a great piece of news, okay? Where are we? Interestingly enough, as you see from this breakdown, everyone today thinks I either have to be in Boston, New York, or Silicon Valley. It could not be farther from the truth. 63% of active angel investors do not live and invest there. That's a big number. And based on the Q3 2019 data that just came out a couple weeks ago from PitchBook, I am pleased to point out to you, that's probably a little bit of a challenge to read the back, but the Mid-Atlantic region is number 2 on this chart. We are the second most active region of angel investors in the United States. And here we are. So you're in the right place. So you're not going to have to move to Boston. You're not going to have to move to Silicon Valley. Most bio companies wouldn't do that anyway, but you're in the right place. This is the only self-aggrandizing slide I'll throw in here, along with the 3Q 2019 numbers. I'm happy to report that for the 12th or 14th quarter in a row, and for the 4th year in a row, my organization, Currency Forum, has been the most active angel investment group in the United States, based on feedback from PitchBook and everyone else, as you can see here. So interestingly enough, we're not only the most active investors in early stage, in this particular quarter, and this doesn't happen every month, we're also the most active investors in late stage deals as well. We are, by the way, A and B round investors, or very late seed. So we don't, if you're just getting something off the ground, we're not the right guys, as you'll see it in the sliders. Why are we investing? Well, there's a lot of reasons for that, but I would like to point out that this is one of the most important. There is no better returning asset class on the planet than angel investing, as you can see from this chart. 25 years of data says that the greatest returns on investment exist in these early stage deals. That's why we invest. We also might invest just to support the innovation and entrepreneurship ecosystem and the local, regional, and national economy, as well as local development efforts. We're all sitting in a facility that does that. But I would be remiss if I didn't share with you my favorite.
Greed, for lack of a better word, is good. Greed is right. Greed works. Greed clarifies, cuts through, and captures the essence of the evolutionary spirit. Greed in all of its forms. Greed for life, for money, for love, knowledge, has marked the upward surge of mankind, and greed, you mark my words, will not only save Teldar paper, but that other malfunctioning corporation called the USA.
Greed is good. Okay, so last couple slides in the presentation, and we'll open up first whatever Q&A we have time left for. I think we're doing okay. This is the art of successful fundraising, okay? Do your homework. If you are a bio investment opportunity in anywhere in the life sciences, don't take your deal to Tech Coast Angels. They only invest in tech. It's right in their name. And I'm being a little facetious. I know those people very well. They're a great partner. And in fact, they have started to do some life sciences investments. But the point is, make sure that you've done your homework and you approach people who are going to have an interest in what you're doing. The worst thing you can do is just spin your wheels and waste your time. That word gets out in the community very fast. Try to get enough advice up front from mentors, partners, friends, previous investors, whomever you can find, to make sure that you're walking in the door with a realistic deal. Okay? When I joined IBM a million years ago, I learned a very important lesson. And the lesson that I learned was day one, we don't pay for effort, we pay for results. I was predominantly I started as a systems engineer, but before I got into the field, it turned me into a thing called a marketing rep. I didn't last long in that space. So you need to position it appropriately. You need to be active listeners and be coachable. You need to find a champion that can help you, or a lead investor that will help you. And you have to, I shouldn't say it this way, but I will. I can think of no successful angel investments where a check was written in a sole proprietor business. I don't care how bright you are, you can't figure it all out. I used to tell people, I don't care how thirsty you are, trying to get all of this is like trying to take a drink from a fire hose. You can't get it all, and if you did, it would kill you. You need to build a team. That team doesn't have to be on board. That team just has to be ready, and that team has to be vettable just like you. I'm a psychologist by education, so just about everything that I do in private equity has some touch in the psychology of what makes an investor interested in writing a check. So I tell entrepreneurs all the time, my philosophy of term sheets, of which, by the way, I think I am considered the number one term sheets expert in all of Keiretsu, and there are 2,000 plus of us in the 32 chapters here in North America. I tell people that your term sheet may very well be the most important marketing document you ever release. Of course, it has to have all the I's dotted and the T's crossed, and of course it's a legal document. But it's a marketing document. It has to be designed to get people excited about writing a check. That said, no term sheet on its own has ever successfully generated money. The underlying company and people that we are investing in is paramount. People, plan, technology, marketplace, in that order. We invest in jockeys, not horses. People, plan, whatever your secret sauce is, and how big is the market. That's the order that the smart angel investors follow every single time. And then, the icing on the cake is an investor-friendly term sheet that leads them to the icing on the cake that closes the deal. Okay? It's got to attract people and want them to write checks. What will you have to do to make that happen? Okay, valuations. When people come to Keiretsu, the very first thing we tell them is that if we get to the point where we are going to negotiate a term sheet and valuation, we will do it as a negotiation. We are not a fund, therefore we will never hand you a term sheet and say take it or leave it. In the 5 years that I ran the Rowan Venture Fund, I have never once said to a faculty, student, or staff member that I wanted to fund, here's the term sheet, take it or leave it. I sat down and negotiated every one of them. And you should be able to do that with your investors as well. And to some extent, today, if you find a VC, to some extent they may also be willing to work with you to do that. Okay? But let me say this. I have done well over 10,000 due diligence projects for private equity space, and I can't tell you how many thousands at Keiretsu. We see about 300 plus unsolicited applications a year from companies that want to consider getting funded from us. Okay? I can count on the fingers of one hand